Good afternoon. It's March the 11th, 2016. Looks like we're going to get a strong close in the indexes, a weak close in treasuries. Gold is off too. I imagine most of the selling in treasuries is probably attributable to the strength in the equity indexes. Yesterday's action by the European Central Bank, if you weren't anticipating a rate increase by our Fed next Wednesday, would have taken the dollar up and would have taken treasuries up too, where you could get paid some money on your money, but it didn't turn out to be the case when the shorts began to cover in the euro. So we came in today wanting to buy the 90 to 95 area and just touched the top of it right here. Didn't quite get into it. Thought they might get stops below 94, but this is where our buy zone was, and a nice retest failure. We thought we would get stops above today's high, the Globex highs, then a pretty good chance to get stops above that 2004. As we got deeper in the day, we said we're going to get stops even higher, and the market is going to trade up. And this is probably the most important test of the day right here, where it retested this initial balance area right here. Here was the breakout. The E-mini usually goes through it, but if you want to get in, you place an order 2 ticks above that. You get cute, and you usually will fill. You can place it right at the breakout price. They come back in and test it. Got another nice move up. Got a fat bar right here. Lots of volume. Coming out that bar is low. And this 12:30, 12:45 time of the day is the time we can see a reversal, profit taking. That led to some pretty good trades. Nice retest failure here. Set up in congestion, and now we got our mom move out of the middle right here. And on these congestion, if you only get 50% into the congestion area from here to here, you should retest this high minimally. If the top of the congestion area holds, it comes back down and retests that, which we could get a setup over here. Then we should go ahead and make new highs. But anyway, the middle of this congestion area held right through here, and we do get a retest of that high, and they got stops up above it. So very, very tough trading. The first hour, again, just stuck in a very, very tight trading range, and the moves are coming now after the first hour of trading. Probably 6 to 7 days over the last 3 weeks. We've been chopped up pretty badly. 2 days this week in this area right here. And the trading community has it. They run at 4 or 5 points. They reverse on a dime. They run at 4 or 5 points. Reverse on a dime. And if you aren't fortunate enough to know to take a point or 2 points, then it's pretty tough to even scratch some of them. So anyway, we had a pretty good directional bias today. We came in wanting to be buyers, and it turned out that way. Now, where did these ideas come from? First, we go to our F1 screen, and you can see yesterday that this breakout was holding. We put this all together. We were dealing with a pretty strong P. You can see that volume and time were matched. So why did we want to be buyers on the F1 screen? Because of this structure. So that screen said find a place to be a buyer. Coming in this morning on our F2 screen, looking at nothing but a P, and looking for a place to buy it, and that was our 95 buy right here. We're trying to lean against this mean green line. Did not quite make it. Why an hour ago did we say we still like the market to the upside? We've got a very strong P. You can see that volume is 1 tick above, 1 price level above the balance point of control. And again, this is why the profile is so powerful. If you get the direction of the market right, the side from which you're going to trade, everything else can fall into place. And we see it. You see it regularly in my trading. This is a counter trend trade. This is a counter trend trade. It's not the best trade. And you see how difficult it is to make money taking those trades. And that's half the point of taking those trades, is to show you that it's just a hell of a lot easier to go with the direction of the market. So if the market were to close right here, we're trying to sell 9s to 14s. And then 19s to 25s. Fundamentals really don't warrant us being this high. That looks like the business is slowing down. But you have to remember that the stock market, today's price in the stock market reflects where earnings and sales and revenues and everything else is supposed to be 6 to 9 months from now. Or at least it did back in the old days. I don't know if you can make that argument anymore. On the buy side, we broke it out from 03, so we'd be buying the buck to 05. Like to lean against 03 if possible. And then 90 to 95 for buy 2. Get down and start trading below 2,000. I'm pretty sure they're going to go get stops. And we've got this little imprint London right there at 94. So that's the way I see it. There is no news on Monday. It'll be follow-through buying in the world's equity markets, and how the market continues to react to the ECB rate cut and increase in QE. It's easy to talk about after the fact. When you get in a trade, you have to put the trades on according to your methodology, and if your methodology is sound, you'll have money in the account when it's all over. But on any given trade, you don't know. And we go for the minimum expectations in the room. We will preface trades. This could be the trade of the day. If 2,000 holds, have a shot at a big trade, that would have gotten you 30 points. Actually, could have gotten you 40 points plus just if you figured out how to hold on to it. So there are different quality of trades right there that we will take. Okay, we were pulled to this high volume number, the mode right here, lower high, lower low, F1 on the note says find a place to sell it. I think that's accurate. We have the FOMC next Wednesday on the 16th. And that's going to be the big piece of news, probably bigger than in the unemployment news this month. And again, volume is moving lower in these distributions, so we're looking for a place to sell it. So 11 to 15, fairly aggressive, sell 1. 19 to 23, sell 2. On the buy side, 1 to 5, think they can go a little bit lower. Don't know if we can break it, so we'll play for lower prices. The E-mini is screaming north. We don't want to get long. We just want to find a place to sell it. Then 25 to 29 for buy 2. Looking at the 30-year, we have 3 distributions lower. The knob spread has come in quite a bit this week. So our last rotate stopped at 8. Then we got a high up here at 16. So 7 to 15 is prime sell territory. I'm going to put 11s to 15s out there. Can live with a 7. Maybe a little bit higher. Might get some help from the E-mini. And then the spill came from 24. We'll go for 23 to 27 for sell 2 because of the volatility we can have in this contract. Got this low volume number right above 28. We stopped just above it, so 21, 25 buy 1. And then 5 to 9 buy 2. Big market, very volatile, can move 2 to 3 points when it moves. Okay, risk on investments were in vogue today. It came in with the stock market and gold suffered. Everything here still says look for a place to buy it. Had pretty good buying below 1250. Had really good selling above. Pretty much 77, 78. So we can take it from either side. Got volume at 55. Then we have volume down at 52. So 50 to 55 looks pretty good. It's a B right now, so let's go for 50, 52. $45, $47. On the sell side, $59, $61. $64, $66. Crude's strong. I think Nancy's call for 40 bucks is probably going to happen. Just not showing any signs of breaking down. So you can see this 39.75 to 40 bucks right up in here is looks like where the market is headed. And you can see this low volume right now. Higher low, higher high. So this structure and screens still say find a place to buy it. Hard to believe off the fundamentals that we every day, but that's the nice thing about crude. Generally speaking, more supply will take the market down over time, but on any given day, who knows? And so you don't pay a lot of attention to it. In the back of your mind, if the market does start to sell because the fundamentals are so bad, we can get a bigger ride to the short side with that type of logic. But other than that, don't spend a lot of time dwelling about it or talking about it. There's your low volume number at 39.38. Here's your low volume area. You can see that the market really, we're this close, would like to probe into that to see if there's still sellers there. So if we close right here at 46, 38.75, 39, sell 1. And we'll make 39 and a quarter, 39.50, sell 2 to pick up that low volume number. On the buy side, we had a 38 and a quarter this morning. Worked pretty well. We'll leave it at that. 38 and a quarter. Got there in D period. And then we'll make 37.50, 37.75 buy 2. A hard time counting today. Is defying gravity and defying the news, and the markets are telling us that Draghi's latest move may be the last move by a central bank ever. Draghi did say yesterday that he wouldn't be cutting interest rates anymore, so maybe the bad news is behind us and time to cover those shorts. If he's not going to cut interest rates anymore, no reason to be short the euro, right? We got a higher low, higher high, and here we sit. We're looking at a P right now. Pretty strong market. And looking here at definitely a P. So I like the short side of the market. So this we're at 81. So 112 even. Sell 1. 12.25. Sell 2. I've gone to 3 tick increments. On the buy side, we broke it out at 58, so 11.50 buy 1. And 11 and a quarter buy 2. And that's it for this Friday, March 11th, 2016. We've had a fun week. Hopefully we've learned a lot. Got some great input by Rich on how he trades the market. Get intraday commentary and teaching sessions. I'm going to have fun this weekend. I hope you will too. We're supposed to get rain. We need it. Hopefully some of that will fall. I will see you bright and early Monday morning. I'm out of here.